Hello again, everyone. This is Joe Henches with Beyond the Chart, and this is technical analysis of the stock market today. Today is Thursday, February 26th. We're going to take a look at the market the way we usually do and hit some of our global indices. And then we're going to take a look at Twitter, Under Armour, United Continental, VIP Shop, and Alibaba. Okay, the Dow Industrials was down 10 points today. So again, we're getting a little compressed in here in terms of the trading. Last 2 days, very tight bar in here yesterday, a little doji bar today. Not quite as tight, but again, you can see this kind of pausing bar just like back here on these 2 days. Okay, so that happened back here in November, late October, November. You know, you get a couple days, you expand, you get a couple days, you expand, a couple days. So, you know, a little bit of repeating that type of action. It's also interesting, if we go back to February last year, interesting pattern that we're doing, it looks similar. Okay, now, of course, you had this big drop right here, but this kind of activity looks real similar to what we're getting right now. All right, S&P 500. It was down 3 points today, and again, similar type action. Kind of a slow grind. The NASDAQ was higher. NASDAQ was up 20 points today, so it's continuing that push, and look how it's riding right above the Keltner channels, right up in here. Okay. New York Composite, this was down 35 points today. This is a broader index, okay? It's broader than the S&P 500. So of the indices that I'm tracking, the 5 I always talk about, this is the broadest index, or broadest index, I guess I could say. You know, 6 one, half dozen of the other. Russell 2000, it was up 4 points today, and again, it's pushing, continuing this push right up into here. Look at the indicators on this now. We're not getting any divergence. It's now up in that overbought territory, but that doesn't necessarily mean anything except that it's elevated. Okay, now we are getting a little bit of divergence here on DI+. So, you know, we've had a lot of days in this little push that we've had. So need to kind of be paying attention to that. The short-term trading index is right in the middle, right in the neutral in terms of the 10-day. The VIX, it fluctuated a little bit. It was rallying when the market was down and then, you know, pulled back. So it's kind of gone sideways. 13.69 on the 24th, which is Tuesday. And so, you know, we're up slightly, but basically sideways for the last 3 days. High-low index, again, showing nothing. This is going sideways. It's actually down here today, you know, dropping a little bit. 119 more new highs than new lows. And I think, let me go back to the New York Composite because I want to take a look at the McClellan oscillator here. Again, this is stuck right in the middle in terms of not showing us an extreme reading up here in overbought or down here in oversold. So just kind of ambivalent, you know, in terms of the indication. All right, let's go ahead and jump in and take a look at the international indices that we've got. Start off here with the German DAX. And boy, this has been strong, continues to be strong. Look at this push here, up 116 points, closing almost on its high today. So I don't know. They must think something positive is gonna come out of the Ukraine situation or something. I don't know. And the stimulus in the Eurozone area. Let's see. Let's take a look at Russia. RTS 1. And Russia's it's kind of gone sideways here last week or so, down and then up a little bit today. So can't make too much out of it, except this last few week trend is up, you know, going with the rest of the international markets right now. India is the next one. There it is, Nifty 50. Okay, so this is pulled back down, a little bit of down, up, down. I don't know if this is still part of a fourth wave consolidation or not, but anyway, that's what it's doing. It's still, you'd have to say it's kind of in a sideways mode right now because it did not take out the high here, hasn't taken out this low, so just kind of trending sideways right now. It's had a big run. And the last one we'll take a look at is the Shanghai Composite. Now, this was closed for almost five straight days, starting on last Wednesday, because of the Spring Festival, Spring Holiday, the Chinese New Year, all of that celebration going on, holidays. And so the last 2 days have had trading again and had a nice big move here today, up 69 points on the Shanghai Composite. So right now, I'm counting this as an ABC flat and corrective wave 2, and think that maybe we're pushing here for a new move to the high side. Now, you never know for sure until you start to take out these previous peaks in here. But right now, that's the way it looks. Okay, now we'll take a look at the dollar index and U.S. oil. Because the dollar index, I talked about this last time, how this in this consolidation pattern here, it broke out of that today, and therefore with the continued push of the U.S. dollar higher, thought that would impact crude oil. And the crude oil was down $2 a barrel today, but it didn't show up here on this USL, United States Oil, as much as I thought it would. Now it was down. It was down 0.6, but I thought it would break out of this congestion a little bit more, kind of comparable, just the opposite of what the U.S. dollar did. It just hasn't done it yet, so we'll have to continue to watch and see. If that dollar continues to push like I expect it to, this is probably going to come down, at least retest the lows here, if not go lower. And all right, that's it. Let's take a look at the stocks tonight. All right, we're going to start off with Twitter first. And of course, Twitter had this big move here and after earnings, and it's continued to kind of slowly rally, just chop, higher here. I think it's getting a little bit of resistance from this consolidation, this whole area right here. And you can see that, the previous high trading is right, the high here and here. I am still not convinced that this is a new bull move. Now this gap is pretty strong, but I don't know. We'll just have all this choppy overlapping right down in here still has me thinking this is a part of some kind of corrective, but this hasn't collapsed back down. So I mean, you got to, I've got to give it that kind of weight. This could be something else, and I need to spend some time, on it. But right now, that's it's continuing to slowly trend higher here on Twitter, although it's fighting this overhead supply in there. And the next one we're going to take a look at is Under Armour. Now we're in Under Armour in Trade Ideas, and it's continuing to trend high. It's looking good, although today I don't like the way this little pause day. It's kind of an inside. It was inside the trading of here. High 77.23. We took it out slightly, but it just, it's struggling these last 4 days. After this nice big day, a gap up, and then we're kind of struggling in here. Little bit concerned, would like to see get some momentum. Now we're not getting any divergence on the RSI. A little bit of divergence here. And sometimes when the DI plus or DI minus breaks this ADX line, sometimes that's an indication that whichever one does it, that the strong move is over. And, that's the DI plus. So I'm kind of watching that too. Anyway, right now, staying with the trend. It's riding above the 10. All the moving averages are aligned to the upside. It's above this, kind of had this breakout, above this this whole pattern right in here. And so got to stay the path of the least resistance is with the trend right now. And that's where we're at. And then United Airlines, this one was a little disappointing too. United Continental, here we go. This one was disappointing. I thought we were going to run after this move here. Okay, now we're in this one too. And today was disappointing pullback. Got to close down below the 10. So we continue to watch this, and we'll see how it trades tomorrow, and it just kind of go from there. You know, again, I thought that it was trending up here. A little concerned that we may be getting toppy. And so I don't know. I'd really like to see this thing resume tomorrow and continue the push up. You know, especially after we broke this little downtrend here, kind of a corrective move. Thought we were going to get another push, at least to challenge this old high, and it just hasn't done it yet. Now maybe if oil continues dropping, with the dollar rising, we're going to get the airlines moving again to the high side. That is what I'm expecting to happen. We'll see if it happens. VipShop continues to push to the high side here. It had a nice big gap, a big move up here after kind of chopping sideways in here. You know, the 21 did get above the 55. So we've got the long term and the intermediate and the short term did get aligned. The short term dipped down, now it's back. Everything's aligned to the high side, and this is continuing to it's kind of pulled back a little bit, but it's continuing to trade to the upside here. I do think that this is a corrective move. That's the way I've got it labeled. So actually what this is probably maybe like a wave 2 complete. I'm thinking that this might be off and running on a wave 3. At least that's the way I've got the labeling right now. I need to label that wave 2 actually. And bring that over, copy, paste that in here, and then put this as a 2. And there we are. So that's the labeling I'm going to go with for right now. I need to look at what we've got in here. This could be some kind of, you know, 1-2 choppy ABC type thing. I'm not really sure. But, you know, when you get these strong gap moves like this, you know, that's usually a sign that you're getting some kind of impulse wave. Usually a wave 3 is where you get a lot of your gaps. So this could be part of right now a minor wave 3 pushing up in here. So we'll see. And then the last one we're going to take a look at is Alibaba. All right, so Alibaba is now all the way back. It's trading down below its IPO price range. We're down here in the mid 80s, and it's in a solid downtrend. Let me get rid of that trend line. I mean, look at this: the 55, the 21, and the 10. It tried to get close above the 10 just one day, you know, just a one-day move. That's it. No follow through. This is pretty hard down. When you get that kind of angle on the 21, it's pretty hard down. And so right now, you just got to say that the trend is down, and there's no reason to buy it. Now, one of my subscribers brought to my attention the fact that you know, the lockup is expiring. I think I did a little research on that. It's on March 19th. And they had a brief lockup expire on December 19th, which was right here. Okay. And that released 8 million shares. Okay. Now the release on March 19th releases like 320 million shares. And it's like 17% of the total shares outstanding, so are free to be, you know, traded publicly. That doesn't mean that everybody's going to automatically dump 320 million shares. I mean, it just doesn't make sense. But it is adding another potential supply to the whole equation. So you really do have to watch this trend. Do have to watch this trading in here on Alibaba. So it's going to be real interesting. And I think there's actually another lockup period that I saw that's later in September with even more shares being brought out. So this will be interesting to see if it takes out this low back here of 82, 81. So, all right, that's it for tonight. Thursday. Everyone have a great Friday. We'll be back on Saturday with a weekend update, and we'll look at everything for a weekly and daily basis at that time. If you're not a subscriber, subscribe. It's easy to do. First name and email, and then it gives you access to the Trade Ideas webpage and a couple other things. And you can download the free PDF I've got for you. And so I'll be back on Saturday. Everyone have a great Friday.